Hello, folks. Welcome to Market Trends with David Russell. I am Global Head of Market Strategy here at Trade Decision. It's great to be with everyone. Um, Today is a very interesting day with some interesting economic news and a lot of other interesting earnings. A fascinating situation we're looking at now. A pretty interesting day when you can have a name like IBM breaking out and a stock like Tesla breaking down. It does suggest that we're in a new kind of environment versus some of the things we've seen recently. We're going to cover some of those things today. Very quickly, want to just run through these disclosures. I'm also going to share some information in the chat. And then I also want to direct you to tradestation.com. And if you go to the Insights tab at the top, you're going to see, if you click on the Insights tab, it will take you to the blog. And on the blog, there's an article that summarizes a lot of the main things we're going to be talking about today. So it's great to be with everyone as always. So here on TradeStation, go to Insights, and it will take you through. This is the blog that you're going to see, the Market Insights blog. And here we actually have a blog post for the market trends doing today. Today's installment. We do these every Thursday at 2 p.m. Eastern, so it's great to be with everyone. All right, so some of the big things we're looking at, we always kind of start by looking at the S&P 500, and I'll tell you, I believe it's just right now that we will not see many moments like this in the economy or the stock market in our lives. I think this is a very unique time we have right now, and we're on the cusp of ending a long-term period of gloom. And I think it even precedes coronavirus. In my view, it goes all the way back to early in the century when people were very negative on the job market, and we had a jobless recovery, and then we had, in the early 2000s, and we had the financial crisis, and we had the Great Recession, then we had COVID, then we had inflation, then we had rate hikes, one thing after another, making people miserable. And now, one after another, each of these negative things is falling apart and going away. So it's pretty interesting to see that. And we really start clearly with today's GDP report. And we're also seeing it pretty clearly when you look at the price action in the market. Here. Okay, so right here, the S&P up 5 straight days. And at this point, it's interesting that we're forming a really tight inside day. These are some of the main things we're looking at overall right here. And I think it's interesting that today's GDP number absolutely crushed expectations. And normally, the reaction would be, oh, now the Fed's not going to cut rates or interest rates going to go higher or something like that. But then the inflation side of it also kind of eased down. So, I mean, this is Goldilocks, and the Goldilocks story just keeps actually getting more positive here. And I think that's kind of important to recognize. As we look at the overall market, though, what's important to me is, first of all, if we look here at the MT breadth tab we have now, if you guys don't know, here on our blog post, we have a link to a zip file. If you go into the zip file, it has a series of workspaces that have different tools and stuff. I've explained it before, but if you go in there and you first want to import the ELD files that have the trade station indicators, and then you can use some of these workspaces that I've created. But this shows a number of companies in the S&P 500 above their 20-day moving average. What you can see is that's actually had a big drop here. And this is when the mega caps came roaring back. And now we're starting to see, though, the participation is improving in the market. We're seeing this gap narrow. You're starting to see the advanced decline line, which was kind of poor early in this bounce, is starting to kind of recover here. More stocks are kind of inching toward highs. So this kind of is broadening here. And I think it's interesting to just kind of to see that. Again, this is overall a kind of sign of strength in the market. What really did catch my attention, though, there's many things here, but one of them is the fact that we often look at the American Association of Individual Investor, their weekly survey. What's interesting is the number of bullish people dropped to the lowest this week since back here in the beginning of November when we said there was an existential change in people's sentiment. This was a massive change to the positive in this time, and we talked about it a lot at the time. But now we're back to the most negative since early November. Now, in my view, when you're in a bull run kind of like this, people get skittish. They start selling too quickly. They start thinking it's not going to last. The initial kind of period is one of disbelief and kind of skepticism. There is a saying about how bull markets begin with skepticism and all that sort of stuff. And I mean, this is playing out as you would expect. So it's really interesting to see the amount of bullishness actually dropping here. as we look at the overall market, I've been kind of wondering if we would not maybe get a test down toward this high. I'm going to look here on this blog. There's a special workspace I keep for these webinars. But what's interesting is, I've wondered if we're not going to maybe test back down towards these highs. But when you look at the way the market has not sold today and we're forming a tight inside day, I don't know. To me, this is a very interesting situation. And I think when you look at tightness like this, one of the hallmarks of this advance has been tightness. You see this tight rally, this tight consolidation, new highs, tight consolidation, new highs. A very mild pullback here, tight consolidation holding here. And again, seems to be a period of kind of tight consolidation. So, I mean, we're just pushing up against 4,900, but at this point in time, there's really not a lot arguing for. There's nothing here that really gives a clear sense of bearishness. So I think that's important to realize. Now we have an indicator that we're actually going to be highlighting today, which is essentially it shows how many days the market is up or down, and this can be something to kind of help you, not chase. When you're up, wow, we're up like 5 or 6 days. It basically counts the up days and down days. And I want to just kind of show that if you go to the bottom here, we actually explain this. It's actually it's a tool that counts the days and moving average as rising or falling. But if you set the period of the moving average to one candle, then it works on a simple up down counter. So this can be kind of useful because if you look at when stocks are advancing, I mean, let's look at one like, for example, that's been strong recently, like AMD. You'll often just see that, it rallies, you get one down there, you just kind of have a little bit of a sense here. We have, say you're bullish on AMD. And at this point, I mean, earnings are soon in this one, so I'm not going to, who knows exactly with something like this. But the thing is if you're in a period like this and you're bullish on the name and you're like, wow, I've got 3 down days, that might be a sort of signal of it's had that period of pausing. This is a time-based pullback method, not based on price. So it's just like the market wants to pause for a few days and then continue. Sometimes when you're ripping and you're really moving aggressively, you don't actually get pullbacks to levels. You simply get pauses based on time. And it seems to be that's what's happening right now. Now, I've many times I've compared this to the mid 90s, and today's economic numbers. The GDP was 3% versus like 2%. Prices coming down. It basically paints a picture here where the consumer looks to be incredibly strong. Last week we had a better than expected consumer sentiment number. And in fact, I want to show you what they actually had in here. This is from the University of Michigan, but they actually said that over the last 2 months, sentiment has climbed 29%, the biggest 2-month increase since 1991 as the recession ended. So it's really important, I think, to realize, like I said, I think we have to realize that people have been so negative for many reasons. And the data, things like the consumer sentiment, these numbers have been way too bearish relative to the employment and other things. And for whatever reason, there's been a lot of negativity in the country. I think it's a combination, like I said, of jobless recovery. And well, that was a long time ago, but there's been a lot of negative things with coronavirus and everything else. And then you get to this point in time when it fades. And I think we're at a historic moment like that right now. And I think it's important to realize these numbers are not normal. This is historic stuff that's happening when you look at these sort of numbers. When you look at this number, and then when you look at this number back here at the beginning of November, when it went from 24 to 42% bullish. This was the biggest increase in like 20 years or something. We documented it at the time and talked about it at the time. These numbers, a GDP number, crushing estimates today with inflation coming down. These numbers are not normal. We are seeing something here that is a big sort of thing happening. And I do sense that we look back on this moment in 6 to 12 months, we'll be like, wow, that was really when the page turned and we entered a whole new era of economic expansion. And it just seems like that's where we are right now. The recession that never happened, and the way that we're seeing the strength of the consumer stepping in and filling the gap that was left after this huge wave of business investment that happened in 2021 and early 2022. We had a ton of companies investing, building factories, all that stuff, and now we're going right back to the consumer, even as all the stimulus money and all that stuff goes away. Consumers are still the whole thing of the student loan repayments, all that stuff. that the consumer is stepping in and filling the gap here, and this is, I think, really important to realize. Another thing here is the amount of cash on the sidelines. This is retail. This is money market. Now, this data has a little more lag than I would like, but it shows that there's just money all over the place in money market funds. If you look back at other moments when this thing peaked and went down, it actually marks in many ways the beginning of more of a positive environment. I mean, you see this really dropping here in 2003. This is right when that rally, there was a rally that started in early 2003 when the Iraq war, as soon as the Iraq war started, the market started rallying, and you could see money market funds were drawn down. Coming out of 2008, 2009 crisis, money market was drawn down as people moved money from money market funds into the stock market. And here we haven't even started to draw down the money in money market funds. So it just shows that this is just another piece of dry powder that can potentially support the market. Now, another thing I want to show, I'm going to show this on the trading view chart. It's a little bit easier. I have this marked historically. Is let's look at the S&P 500 on a long-term weekly chart. And you know, I've been watching this channel for a while. And if we look at this channel, what we can see here is this really starts, in my opinion, back here in kind of 2011. And this was kind of the breakout that happened, you can see around 2012 and 13. But what's interesting is if this channel holds, it could, it could kind of point toward a revisiting back up toward 5,800 to 6,000. I mean, so I think right now we're in that spot where if you take this long-term view of the market, when we have now closed at new highs, when you see these long-term kind of 18 to 24 month consolidation patterns followed by new highs, there has been a period, a thing where they basically continue higher. And now that we've been having weekly highs and daily highs above where we were at the beginning of 2022, it does confirm when we look at the money on the sidelines, when we look at the sentiment not yet getting frothy, still very skittish, it does suggest that there's still money on the sidelines, there's disbelief, and we're climbing that wall of worry. All right. Okay. So I wanted to just kind of show that. Let me quickly go over here to my TradeStation platform and show you. I want to quickly show you the standardized returns before I dig in a little bit more to some of this stuff happening at the sector level. These are standardized returns of some of the exchange traded funds we're going to be talking about and using to kind of analyze different parts of the market. Now, as you guys know, I like to use ETFs as analytical tools to see where is the strength, where is the weakness, and using the award-winning TradeStation platform with radar screen and a few custom indicators I've created that I share with you guys in the zip file, it's possible to really detect where the strength is in the market and to kind of look for opportunities. So these are the standardized returns of these ETFs. And actually, before I jump over, let me go over here to my price grid. I already have the S&P 500 loaded, but let's go ahead and fire up our MA tool. So go to data, add symbol list S&P 500. Let's bring in some earnings dates. Let's do that one though. The NASDAQ 100. Go to settings. Go to pay data. Add symbol list NASDAQ 100. So now these are going to populate in the background. Now I'm going to jump over to my MT sectors tab, and I'm going to look at two ETFs in particular. The XLC. This is a communication ETF. Some people forget that Meta is not a tech stock; it's a communication stock. It's kind of funny you'd put it in the same bucket with AT&T, but that's what the people at S&P have done. But it's interesting here. Two names in particular. Well, three: Meta, Alphabet, and Netflix. So you can see here that this is kind of gaining back. This is its ratio against the S&P 500. If you look historically, it is still, relative to the S&P 500. Tech has broken out to new highs. Semiconductors new highs. Software. This one has not gone back to here it was in early, in late 2021. It has not yet reclaimed those old highs. It is still, relatively at a lower spot against the S&P. So this is an area here where, if you look at it, it has run, but some people might still see, space. And, the S&P is a new high, and NASDAQ at new highs. This thing is not. Pretty interesting to look at from a sector perspective. Then on the other hand, we have consumer discretionaries. Now, the big name here is Tesla. And we're going to get to Tesla. We were talking about the issues with Tesla. But look at how the consumer discretionaries are really under a cloud here. So Amazon is also in this bucket, but I wanted to kind of point out that the right now we're in a spot where, from a sector perspective, communications are really picking up steam, and that's what some of the things we can kind of see here with this tool. Meta, by the way, reclaimed it got to 1 trillion market cap in the last couple of days. So now we have to look at Tesla. I mean, to me, now I think it was last webinar, if I remember correctly, we had talked about different kinds of potential downside, kind of setups in Tesla, and we talked about the possibility of looking for a break under 180, and 180 down to like kind of 160, looking for a move down to this low. And at this point in time, it might have been a little bit premature, but we also can, if we look here, it's it's not entirely. Let me just, sorry, for some reason my chart got moved here. Let me just, should be up here. Might not be entirely out of the question over the next few weeks. It's hard, in my view, to worse than this report was. And the main reason is that they didn't provide guidance. They said growth is slowing, and everyone knows that the competition, everything else is increasing. And then on top of that, you have this whole kind of issue of Elon Musk getting more ownership in the company and all this stuff. So to me right now, Tesla's in a spot where it's kind of the sick man of the NASDAQ at this point in time. And it's interesting to see, where Tesla's fading, IBM is stepping in, Intel might be stepping in, Western Digital has been performing as a new kind of darling of the space. So I think it's kind of interesting just to kind of to see here that people are finding other areas that have been potential opportunities. And we had talked about this thing in Tesla, and I think it's hard to envision right now a situation where Tesla does particularly the next few months. And the real reason is that um, on our Market Insights blog, we've often talked. I'm just if you actually go here, I'm going to share this link. But if you go to our Market Insights blog here and you Google why stocks move, you're going to see a series we did. It was like 4 or 5 years ago now. I can't believe it. But basically, what this is this basically, it's in the chat if you guys want to see it. But what this does is this outlines, in my opinion, what are the 7 fundamental reasons why stocks move. And the number one reason is volumes. And there's links to all of them in here. But the key thing is volumes are just like, people are buying more of your product or less of your product. And right now, you don't have that in Tesla. You do have it in other parts of the market. Now, some other things that are happening, though, are margins and business transformation. And we cite them in here. This one is actually about strategic actions. Strategic actions when companies do spin-offs, which Western Digital, I think, is doing a spin-off. And then you also have business transformation is one of the other things in here that we talk about. But when a company changes its business model, it can have significantly positive impacts on its market and on its value and its multiples. And one of the reasons is because if they're having trouble with their business model, people know that the stock is normally going to be in a weak spot. Then if they step in to fix the business model, you instantly have that potential for a new excitement in the name. The other thing is that management teams are generally not stupid, and they're not going to make a change that's bad. So it basically means that there's a chance that whatever happens, the incremental news going forward will be positive. So in my memory, the most interesting example of business transformation, or the first one that really caught my mind, was the transformation to software subscriptions about 10, 12 years ago. It started off with the video game companies, Adobe. It used to be you'd go and buy a big set of DVDs and install Adobe on your computer, and that was it. Now, then they started doing this thing when you pay monthly. Same thing with the video game companies. And that business transformation completely transformed the software industry. And it also drove up multiples significantly because investors were like, hey, this is kind of cool to have a company that basically gets regular revenue streams instead of having to do new releases and all the regularity that caused. It totally was a business transformation. Now, let's look at Netflix. Netflix is doing something very similar here. And I think it's interesting to be aware of that. So Netflix, communication stock. Another thing that's happening right now is IBM is growing in the cloud space. Now, if you go over here to our tab called MT, I'm sorry, fundamentals. I actually wanted to compare IBM and Microsoft. You can quickly kind of see here that, for example, IBM trades for half the price of free cash flow. It trades for half the price to book. It trades for a tiny fraction of price to sales. It trades for a much lower PE ratio. Most of these different things are show the valuation difference, something like an IBM. So if IBM goes from being this like stodgy, slow moving old company to more of a cloud AI business, there's potential for multiple expansion relative to the leaders in the space. So you compare to a name like Now, ServiceNow, or something like that. It's not to say IBM is going to become as fast growing as ServiceNow. The revenue growth, ServiceNow is growing 26%, IBM is growing 4%. However, if it actually goes from a price to sales of 3 times to 4 times or 4.5 times, ServiceNow trades for 17 times revenue. So I mean, right here you can very quickly compare these things using the fundamentals tab on the MT Jan 2024 main workspace here on the TradeStation platform. So I want to show you some of the ways using these tools that we have included in our zip file, how you could actually um, easily compare stocks on many different metrics. All right. Some others popped up. I'm going to quickly actually show you. I'm about to do a trading view idea on Blackstone. Let me just quickly show this to you. But basically, I mean, I'm going to be posting it this afternoon right after the webinar. But many things here, they had decent earnings today. And wait a second. There we go. I have to move this. My line. Oh, wait. I'm not sure what happened to my line. But anyway, look at this. You can see here, this was a weekly close from back here on Friday, Jan 12. We go under it, jump over it on Monday, false breakdown, hold. Today earnings come out, holds, continues strong, right? We have old resistance here, resistance in September, resistance in December, support in January, 50-day moving average. We have stochastics coming off an oversold level. Now, if you remember last webinar, we were doing our Keltner pullback indicator. Now, I don't have that right here. Wait a second, over here. Sorry. Look at Blackstone. Now, Keltner pullback will tell you when a stock is at the bottom of its Keltner channel or below its Keltner channel. So last time we did this webinar, we had actually talked about Blackstone down here. Another stock that was rallying off its Keltner channel was Applied Materials. This was one that popped up down here. It was at the bottom of its Keltner channel a few weeks ago, and then it started rallying when when the semiconductor industry kind of came to life. So the Keltner pullback tool that we've talked about and shared as a special indicator. Whenever we do market trends, we usually have, not always, but most of our webinars at the bottom here, we have something called using the platform. And if you go back to you go back a couple of weeks, we were highlighting Keltner pullback tool. It might have been last week. This week we were highlighting this functionality I wanted to show you. You could see days up and days down using this. So just if you don't know exactly, I want to just mention, if you click on this, I changed the histogram. It might come up for you guys as a line. You would go to style, change it to a histogram. The input, I think by default does 50 days. I changed it to 1. And that way it's just going to be 1 day at a time, and it's going to basically show. But if you want to see something else, like how long has the 20-day moving average been rising? Look, if I just change this to like 20. In this case, the 20 is this blue line. See, it will now show you, okay, here's where it turned positive, And one of the reasons I do this is I actually have a little trick that I have found. It's a little technical tool that I created myself, but I found it to be kind of useful. The 10-day moving average, how long is it rising or falling? I have found that there's points in time when the market, if the 10-day moving average has been rising for more than 30 candles, it's pretty rare to see it move in one direction for more than more than 20 candles is rare, but once you get over 30, you're at a spot where you're going to start to think maybe the market just has to pause or go, consolidate a little. So what's interesting here is if you look at the end of last year, the 10-day had been rising for something like 41 candles coming off this low. So that was pretty extended. And then what did it do? It just chopped sideways. It had a few periods of just nothing, and now it's rising again. And in a bull market, that's actually what you kind of would expect. But I want to point out that's how I've often used it. That's why I created the tool. But then I also, realized that it could be used as a simple up down counter by changing it to one as I'm doing here. So that's our lesson today on the TradeStation platform down here using the platform. All right. So let me keep going here. All right. I want to jump back over to TradingView simply because I had a few things here that I was working on, and I think I've got. Let me actually go to the Russell with a daily chart here on TradingView. Now, remember, TradingView is an API partner of ours, and you can link your TradeStation account to TradingView. And I'm going to remove some of these other markups I had done. I mean, I think a lot of these lines at this point they have a degree of relevance, but what was really interesting to me here was to look at a different indicator we use here. Where you can look at the 8-day and the 21-day exponential moving average. We also have an indicator called this is also included on the TradeStation workspace I've given you guys. It basically shows the days. It basically shows when the moving averages cross in a positive or negative direction. But this is an indicator some people use. And what's interesting to me about this is that you can see when it crosses here that you get continuation, and we've gotten the bullish cross. So basically here, with this shows the 8-day exponential divided by the 21-day. When it's positive, it's going to be, means that the fast one is above the slow. And I found it to be an interesting kind of oscillator. It's one we created, but it's similar to techniques other people have used. And here we have a little inside day, but we're just kind of, again, holding along this level here. And I think it'd be interesting to kind of see. I'm watching here because to me, what's interesting about the Russell is it's obviously small cap companies, but the thing is, like I said, if you're starting to see more companies over here in our MT breadth workspace, you're starting to see more companies above the 20-day moving average. We can also look here at the Russell, and we can see the same thing. The internals of the Russell have been improving here. So I want to just kind of point out that we could be at a spot here where the Russell is starting to show some potential. There was another indicator I wanted to show here. I think the key thing was you can see how this was falling, and then once it really gets above and you get this kind of confirmation with the 8-day rising, I want to just point out because I'm watching this here, and it seems like with this tight consolidation with the rest of the market going and this one kind of lagging, but when you consider where the economy is and everything else, holding above that 21-day exponential, I'm just watching because this might be one that starts to play some catch up. All right, let's jump back over to TradeStation here, and I'm going to show you. Let me just close this for now. All right, I want to show you URI. Pretty interesting. United Rentals. I mean, I can just say that this is a stock that this is a trading vehicle. This thing really can be a dynamic trading stock for momentum when it moves. What's interesting here, if we look over here on our price grid, we can actually see that. Let me just. One second. All right. We can see here that URI is one of the top performers so far this year. Now, I got to say that it's pretty interesting when you see things happening on a calendar year. There are kinds of rotation that happen. And, I want to point this out because if we're in a new year, a new stock, a new breakout, no recession, everything else, this is the kind of momentum stock that people might turn to. Today, the earnings and the revenue were pretty good. And the fact is that the stock is up a lot relative to its results. The results were not that good. And what does that tell me? It tells me that people want to own this stock. And then you can look at some other names. This was the one that jumped out to me. IBM also. people want to believe the story that IBM is going to play catch up. It's going to be a new cloud name. And if there's a desire to have that, then it shows that people want to be owning a name like that. And it shows that it's probably under owned. And now we're in a period of time where there's rotation into it. But this was to me very interesting to see this kind of expansion in a name like United Rentals. Another one we had talked about that was interesting is Textron. Now, Textron does Cessna aircraft, they do Bell helicopters. This was one that we've been talking about late last year because, this is actually a pretty interesting chart if you look at it on a long term. Because look at how basically this thing broke. This was its highs from back in 2022. And basically it just sat here and it had this what was this, like 4 to 5 months of sideways movement. And then it gets a breakout. So I think this is a name here that is a brand new breakout. And the other thing is, I mean, Boeing everything is just going really rough for Boeing here. Wait, that's BAC, but I mean, Boeing, we all know the issues Boeing's having. I mean, and here you have another aerospace stock that's actually getting the job done, beat, earnings revenue beat, breaking out to new highs. So I think it's important to look at something like Textron here. We had talked about this pattern and we had been watching it. We did a trading view idea when it was up here near the high and it did pull back some, but what did it do? It also went down to that Keltner channel, 50-day moving average. It's pretty interesting when a stock is near an all-time high and it's also hitting the 100-day moving average. In other webinars, maybe I should actually do that next week. I'll see if it actually works, but sometimes we do have a tool that actually can find stocks that actually can, find where the moving average is relative to the 52-week high. And it's interesting when something like the 100-day moving average squeezes up, or the 50-day is a few percentage points away from the 52-week high, because what it often means is it means that the stock is sitting and pushing. And when it does break out, it could be a lasting breakout. So I want to look at Textron here. Of all the things we're looking at here, to me, the one that seems kind of most interesting is this price action in Textron because of this, 5-month sideways move, which is like just barely higher than it was back here, when the bear market started in early 2022. Is this recorded to watch a playback? This will remain on the live section of the YouTube channel for TradeStation after it's done. So yes, it will remain available online. When should you short NVIDIA? Well, in my view, something like NVIDIA here, this would be one that, when you want to look at something like this, pausing, to me, the key thing is the first thing is here in the TradeStation platform, you can see that February 21 is the earnings date. So from my perspective, this would be something that is setting up for a potential sell the news event, kind of after the earnings report. But at this point, I don't see anything here that would give a clear kind of signal for this stock to really pause at all. It's way above the Keltner channel, but typically when stocks get this overbought, they don't just drop quickly. So I think that right now, to me, it doesn't make a whole lot of sense to be thinking about being short NVIDIA. It's not to say that it's going to go straight up or it won't drop, but this is one where you got to be playing really short-term moves to capture a drop. Now, of course, it could drop when you look at this price action even today. It doesn't. You have an inside day. It's down, but it's an inside day, which is a bullish continuation pattern. So there's nothing here at this point. I would again kind of think about it based on time, and I would say that right now it's not that different than Textron. It basically had a period of time it moved sideways for a good 4 to 5 months, and in my view here, it probably doesn't have a lot of opportunity for selling until, and if anything, maybe look at models, something kind of like this, when you actually get to a point where something like the 21-day crosses under the 50-day, something like that. But at this point, for me, it's too far out in the future. To me, just this breakout based on time alone suggests to me that no one's going to be selling it sharp, very aggressively for for several months, probably another quarter or two. Okay. Textron. All right, I want to show you, and I'm not sure exactly what's going on with Xerox, but this is one of the craziest candles I've seen in a while. earnings and revenue both missed, and you have this just bizarre outside day. Just interesting. I don't know really what's happening with this, but also, I mean, I don't even know what Xerox is anymore. I think they've tried to do software and stuff now. But again, I mean, who knows? If a company like this, let's go over here to our fundamentals tab. I mean, if a company like this, I can tell you, this is not a heavily owned stock, right? So it trades for under book value. It trades for zero point 0.3 revenue. I mean, this is this valuation on a name like this. I mean, it has a negative PE ratio. I'm not really sure exactly about the. I mean, it probably has some kind of negative PE at this point. But this is also one, if you want to look at it based on valuation, I mean, this could be one here where if they can start to turn their business around, a stock like this is probably kind of not going anywhere. So this is to me pretty interesting to see this pretty significant bullish outside candle on Xerox today. But there's also bad in Humana, really, really bad. The health and the medical costs are kind of going back up again. And what's interesting to me is, there was a thing during COVID when people were like basically didn't go to the doctor a lot. And a while for a while, these stocks had kind of benefited from people not using, their benefits. You pay your premiums and you don't go to the doctor, and then they keep the money. But that ship seems to have been long sailed by now. So these health insurers look pretty ugly. And, we had actually looked at United Health as a potentially kind of interesting stock, and it really has not, it's gone the other way. But it was interesting to me about United, all these is that these are very heavily weighted in the healthcare sector. And healthcare is also a safe haven. It generally doesn't do well in a bull market. So seeing, I mean, just kind of saying, don't cry too hard for Humana if you want to see the equity market go higher. Typically, this is not the kind of stock that does well in a bull market. So seeing a breakdown in names like Humana are really not something to be too upset about. So I want to just kind of point that out. Again, everything here, in my view, is confirming a risk on environment here. Not seeing anything here that really points toward any kind of significant risk.
Um, Tesla. I mean, honestly, to me, I think Tesla now is going to be a trap. It's going to be a very you know dangerous thing to try to for a lot of reasons. When a growth stock breaks, it can be really bad. And I think, people look past Elon Musk's eccentric behavior when the stock was going up. But I think right now, Tesla's kind of like the opposite of the stock market. There's a lot of things that can just go from bad to worse. So I think, the competition from BYD, the fact that the green energy moment, like I was saying last week, it's not to say that, alternate energy is going to go away or electric cars are going to go away, but, things don't just happen all at once. You're talking about a major societal change. I think it's just, you got to realize that. I mean, people have been driving cars. We have an entire infrastructure in this country based around, gasoline cars, and it's not going to change quickly. And I think right now, this thing's been rallying really since late 2019. And it has anticipated a great deal of growth. So I think right now Tesla has, when you ask based on time, I think Tesla is in a spot here where it could struggle for some time. And I think we need to be really careful to look at a stock. Look here on the trade session platform. I mean, you can just kind of, there's a lot of ways to look at it, but let's go here to our MA tools. And let me just show you, well, look at the S. I mean, there's a lot of ways to show it. I don't want to waste time, but if you want to look at this, the right now in the S&P 500, like, well, you can look here on breadth. Let me just think about showing it to you this way. You know, basically 376 members of the S&P 500 are above their 50-day moving average. Okay, that is, you know, 2/3 or something, right? Tesla is under it. That's really all you need to know, in my view. At this point in time, you know, um, I think people often say things like you shouldn't love stocks because they can't love you back. And, I know Tesla, one of these names that people have this sense that they want to own and things like that. But at this point in time, from any kind of, buy and hold view or sense of it being a good stock over the longer term. I don't see it. And the thing is, it's not to say that I think it's just a terrible stock for everybody. I don't see right now an argument you could make that says it makes sense to own it for the next 6 to 12 months. And from my view, if a stock doesn't make sense to own for the next 6 to 12 months, it doesn't make sense to own at all. Because the thing is it can just go from bad to worse, and that's typically how things happen with companies and things in the stock market. They go from bad to worse, or they go from if it starts to go from bad to good, like maybe Xerox is doing or something like that, like Intel seems to be doing, then it will surprise to the upside. But when things start to surprise to the downside, there's usually more follow through. And in this case, it seems fairly obvious what's really happening. When I looked at people like Gene Munster and Dan Ives, I mean, these guys are just, they have no clue what's happening right now in Tesla. And I think it's important to realize, I mean, they've been really smart about a lot of things, but this is one where they're actually still clinging to this narrative that we're going to see this big growth of electric cars. And I just don't see it. And to me, it doesn't make a huge amount of sense because something like a technology like this, in my view, if you look at the history of computers, it started at the enterprise level. And I think if you want to see something like this happen, it has to start at the level of fleets. It will start at the level of things like city buses, delivery vehicles, places where they can go back and charge them overnight, and where you can have a dedicated infrastructure. I think the time of the United States embracing electric cars is going to actually take longer than people think, because this is not China, where people on average don't drive very far. I mean, there's a country where, hey, if you want to suddenly go and drive 200 or 300 miles, you don't want to think too hard about it. So I think that I think it's a tough spot. And when you look at the Chinese thing, in my view, and I know this might sound ridiculous, but Toyota is, I mean, technically it's the strongest automaker right now, at least that I'm aware of. I mean, Honda Motor has been doing okay, but Toyota right now is, all the things technically are working on it. The valuation on Toyota, let's go over here. And they actually have some electric cars coming out. So and Goldman gave them a big upgrade somewhere back around here, basically saying pretty much what I'm saying. So that's not just me making it up. I mean, Toyota is, I don't know if they're the biggest car maker in the world, but they are definitely up there in terms of volume. They also have a very strong balance sheet, very low multiple. So if we go here to our fundamentals, let's look at, like, Tesla versus Toyota. All right, so Toyota trades for one time book. Tesla trades for 10 times book. It basically trades for one sixth the price to revenue. It trades for about one third the price to earnings. It trades for about one, I don't even, can't do the math in my head, 1/20th the price to free cash. Oh, wait, I'm sorry, it's free cash flow growth. But basically, if you look at this overall, I mean, obviously the growth, the revenue growth is interesting. Toyota's revenue growth in the last 12 months is 24% versus 3% for Tesla. I gotta check that, but that's, just look at it. So I think right now, um, I think this, when a growth stock is broken, just, it's broken, and for me, Tesla could be trouble for years. All right. I want to apologize with that sound thing. It was a weird thing where the software I'm using suddenly changed its sound to jump over to this, not to me using my headset. So that was a weird thing. I'll make sure in the future that doesn't happen. All right. So I just wanted to mention, we talk about, like, in our business transfer, in our seven catalysts for stock movements here. Wait a second. Where am I? To this. One of the things we talk about, and if you just look through this, if you just follow the different links in here, um, it kind of shows the different things happening. But margins is one of them. And when you look at what's happening today with Microsoft, this was actually, so right now you have these tech names basically are playing the margin game. They're cutting jobs and things like that. I think eBay had job cuts, SAP had job cuts, a bunch of different things here. And this was a trend we saw last year, and we're seeing it again this year. So we're seeing tech names do margins, margin stuff. We're seeing tech companies do business transformation like Netflix. Um, all these things for me kind of help support what we're seeing in the markets. Let me just quickly run through some of these other tabs here I want to mention. This one here, where again, there's a little bit of business transformation. where basically they're doing AI. They're tweaking the way that their reels work. I mean, I've never used reels, but it's this new thing that's I think it's a thing that's supposed to compete with Twitter. Nonetheless, if they're taking something that wasn't working and now it's working, that's business transformation. So I mean, business transformation is when you take part of your business model and you make it work better. Like Netflix changed the thing to do their ad-based thing when they their ad-based subscription model, and they crack down on passwords. That's business transformation, and it can unlock massive value when it happens, as I explained with the other things. All right, so let me just zip through these because I have a few things here. Gene Munster, this is where he was talking about Netflix. What did he say? Taking a boring business and finding levers to pull. This is exactly what I'm talking about, business transformation. He's not happy as much about Tesla, but there you go. All right, what was this? All right, now this is thing that's interesting. We've been talking about this pain in China for some time. It's kind of interesting though, but they keep throwing stimulus at this thing, and I think it'll be interesting in a week or two. I mean, it could be interesting to be thinking about China on the downside. We have been historically pretty, cautious on oil and China here, but I think also at this point in time, when you see what's happening with China, it's going to argue against anything really happening with oil. I mean, to the downside, we had some oil draws, and they're seeing a little bit of upward price here in energy, but there's just a few different things kind of happening there. I don't have a clear view on it right now. I want to just tell you that right now, my bearish view of oil is on hold, but it is not gone because here's another thing. What was this? Oh, Norway, lots of oil and gas. Like I said, the oil and gas production right now is growing in a significant way. We have detailed that a lot, and this is potentially just a pause. So here's interesting. This is just a CNBC article I thought was interesting. This was before they did their stimulus, but I mean, you are seeing people who've been on the China, bandwagon for a long time, jumping off now everywhere you go. And to me, this is just one of the other levers of business transformation of why stocks move is leverage, is balance sheet credit. We talk about it if you want to read through this article and look at the different things that we talk about here. Credit, there's a link to the credit article. But anyway, China has credit going against them, meaning loans, leverage, everything like that. Their entire economy is in a significant kind of leverage crisis right now. They have really the worst of both worlds, and I think ultimately that is a positive though for the global economy, the global stock market, because of pumping in stimulus and also the fact that they are going to probably keep a lid on inflation. All right, what is this? This is interesting. This is a thing I saw that this guy from CNBC put on, and he was talking about basically he quoted Morgan Stanley, noting that we're seeing the PCE inflation coming down. Again, all these things kind of point to this potential Goldilocks environment. Remember, we have PCE tomorrow morning. Okay. Interesting also, this was the PMI report that comes from S&P Global, and these guys look at output fastest for 7 months and prices rise at the slowest rate since May of 2020. So again, what's interesting is a lot of these manufacturing things had gone negative, and they were like deeply negative, and it was interesting to see the economy chugging along, even with the factory sector in contraction. And all I got to say is, what happens if these isms? Ism is next week manufacturing. If ism starts creeping back over 50, and we have this consumption we have, I mean, we're going to look at an economy that's going to be. And then the Fed, I mean, it might make it harder for the Fed to cut rates, but at the same time, I believe, I mean, if you look at what the Fed is saying, they were sending some strong messaging. I think they were sending this here. So when you put those pieces together, we could potentially look at economic acceleration and rate cuts at the same time. And as bizarre as that might sound, that's where the data is pointing. And these things are just now pointing to a situation where it's really a turbocharged Goldilocks, potentially here. This is a Microsoft thing. All right, this is again major psychological transformation of people just now catching up. And if you look back, we did this. If I go to my market trends here, I got to just point this out. This was the beginning of November. This was historic. What happened at the beginning of November, and we talked about at the time this the I'm trying to I'm trying to. If you dig back and you follow through some of these from early November, there were two major events. First, we saw the huge spike in investor sentiment going positive, but the other thing we saw was we saw this massive revision of productivity from Q3 that showed that all the inflationary stuff was a lot better than people feared. So all of these things are pointing in that direction. So um, I think right now we're seeing it's like boom, one thing happens, then another thing happens, and it's kind of like, it's like World War II. First the Russians, first the Germans lose at Stalingrad, then they lose at Kursk, and then the Russians keep pushing. That's kind of the same thing now. Where like the Bears just keep losing. First they lose, here, then they have to retreat and they lose again, and they just keep falling back. And I think that's what you're seeing now. You're just seeing that the Bears just have to. The bearish argument just keeps losing one battle after another. It's lost the recession battle. It lost the inflation battle. It's losing the consumer the idea that, oh wow, the consumers are going to stop spending. Nope. Instead, we have retail sales beating estimates for 6 straight months. We have the biggest improvement in consumer sentiment in 30 something years. So the Bears just keep losing. All right. This is the Humana story. What's this? Was this the GDP report? Yeah. All right. So those are the main things I wanted to show. Now let me quickly jump back over here to my. All right, just kind of emphasizing some of these different areas that are performing and not performing. Um, the crude oil fell more than expected, with gasoline inventories rise more than expected. I'm just kind of going through some of these. Um, you know, Today we can quickly go over here to our. All right, let's just zip through this. We're going to go to our MA tools, and we can now quickly see stocks. For example, the 21-day exponential moving average is just a really simple trend following thing. And what I think is interesting about the 21-day exponential moving average, wow, look at this thing, is that basically when the market bounced, if you look at the S&P here, we basically bounced at the 21-day, the gold line. So it's interesting to look for stocks that are bouncing at that. Comcast also today coming off. But I'm just looking at some of these stocks that are rallying off that 21-day moving average. You can see it using the price grid. So this works for exponential moving averages. MA test works for simple moving averages. If you right click on it, go to studies, you can change what moving average you're looking at. This tells you not only is the moving average, is the stock actually straddling the moving average today, but it also tells you if the moving average is rising or falling, because that gives you a direction, a sense of trend or direction. If we go to our price grid now, one of the things we had looked at before was this idea of Keltner pullbacks. What we did was we said, let's find stocks where the 20-day, now this is a really simple thing to say, I want to find stuff that's in a bullish, kind of, intermediate trend. So we just look for stocks where the 20 is above the 50, the 20-day is above the 50. I'm using this column here, the moving average order. Actually, I might have done it with another one. A lot of these things I set up, and so I go over here, go to data, add label row. That breaks it up, and I can go back up my list, and I click on Keltner pullback, and this will tell me stocks that have that bullish configuration but are near the bottom of their Keltner channels. So I can now click on this and see these stocks. Now, for me, if you have something like this far under the Keltner, that's not what we want. We want something around like right around zero, or maybe a little bit under that. So if you look at some of these names now, see these are stocks. Now, you could change the moving average thing to say I want to find stocks that are above the 200-day or something like that. I'm just doing this quickly, but I want to just kind of show you this is how we use that Keltner pullback. And I think that when we did it last time, we looked at stocks that where the 50 was above the 200-day, and I can just change it really quickly to show you how to do that. Go to this, and now I'm going to go to inputs. I'm going to go to 50, 200, and now it's going to change this calculation. Now I'm going to go back down and get rid of my label row. Here it is, because that basically is breaking it up. Now I can resort, and I can exclude stocks that are basically don't have that bullish long-term pattern. And I'm putting in that label row. Now I can go back to my Keltner pullback, and now I'm going to find stocks here that are potentially kind of have a bullish longer-term pattern. And now let's look at what it gives us. Starts to give us stuff like Franklin I mean, this is like not a super active name, but we can actually say now I only want to see stuff that trades a lot of options. So let's do that first. Let's go up here. Let's actually look for names that trade at least 50,000 a day, or let's say like 10,000 instead. We can now go down here and add another label row, data, add label row. And then we can now do the Keltner pullback again. And now it's going to find stocks for us that are kind of near the bottom. I mean, something like Boeing here is definitely near the bottom. I mean, but these are just some of the ways you can use these tools. And it turns red if it's under 50% because 50% means the middle of the Keltner. So if you look anywhere along here where the Keltner is kind of like red, this Keltner pullback, these are some of the names that are kind of more what we're looking for now. T-Mobile reports earnings tonight. We can see that right here because we have the next earnings date indicator included in our TradeStation platform. But we can look down here, just some of these other names, and look for potential pullbacks of stocks that may have a positive, and you can see them popping up over here. So I want to just show you that's how we use the Keltner pullback. Let me see what else we had. I wanted to quickly cover. All right. One of the things I look at is I look for each week I do a mover of the week. This week I was doing Spotify. I look for a company that's not in the S&P 500. And I don't want to say a company like this will be added to the S&P 500, but my idea is kind of like looking for those companies. If you ever look in the market, there's always some companies that are kind of like S&P members in terms of they're doing well. They are like, bona fide, businesses. The stock is doing well. It trades a lot of volume, but it's not in the index, right? So what I do is I have a special indicator set up or a special way that I do scans. And if you look back, I exclude S&P members, but I look for high market cap, lots of options volume and stuff like that. And this is one of the ones on my list. So it's interesting just to look at Spotify here because they have some interesting business transformation going on as well. Now, again, interesting to look at a name like this because what do we have here? It was near the bottom of the Keltner channel. When it bottomed, it was straddling the 21-day exponential moving average. So today, I didn't see anything super clear with the 21-day exponential moving average. But here's the thing. We're now in earnings seasons. Some stocks are going to gap higher and pull back. So maybe in the next 2 to 3 weeks, every day, it makes a little bit of sense to take a look at that 21-day exponential pullback using the MA tools, EMA test, and just to look for stocks that are kind of pulling back. And remember, you can go and you can add. I'm not going to do it right now, but you could add the average options volume right here. The last thing I want to remind you guys about is that we basically have the earnings date tool here as well. I imported. Remember at the very beginning of the webinar, I imported the Nasdaq 100 to this radar screen, so you can actually see now the big names as they report, but you can also start an options volume or market cap and see when do the big names report. Apple, Microsoft, Google, right here. Boom. And then you can see where they are. And again, you can also say, hey, let's only look at the big names. You can go down here, throw in a label row, data, add label row. Then you can sort by days to earnings. And now you can just see right here, here are the big names. This is how you can quickly rank these up. And you could throw something else in here like Keltner channel pullback, the Keltner pullback. You could throw in the moving average tools from these other workspaces if you wanted to do that. I often do that. For this case, to organize this workspace, I like to keep it separate so you can see the different things in different places. But all these tools are possible with the TradeStation platform. Last reminder here, if you go back up to the top of the blog post, you go here to this where it says downloads are available here. And then if you actually go in, it'll have a zip file. The zip file will have the ELDs. It will have 2 ELDs that you want to import your indicators into the TradeStation platform. And after you do that, it also then has the workspaces, these different workspaces that you can then add. So I'll see you guys next week. Great to talk to you as always. Sorry about the little thing with the sound. And remember, Intel reports tonight, and have a great day. Thank you.